With everything going on in our current national state, many folks are questioning their financial stability and their future. So today I wanted to share with you some information that I think will be pretty helpful. Many times I get asked questions about interest rates, and more notably, it has happened quite frequently with everything going on. Now, minor disclaimer, I am not a lender, and I will do my best to explain everything I can to you with what's actually going on in our economy and in relation to interest rates. So, interest rates are going to go up. However, the good news is that every person I have spoken with that is a professional in the industry across the board and overall, we agree that this is a temporary interest rate increase. Most of us, including myself, feel that once everything calms down with the virus, that we'll start to see those interest rates drop again. I'm going to explain to you, to the best of my ability, how I interpret what lenders are telling me as a real estate professional. There was an oversaturation of the market because rates were so low for refinances. The big banks and lenders recognized that there was not enough supply for these mortgages and too much demand for the refinances. So this, coupled with the COVID-19 and reporting from the media, obviously made people feel uncertain and concerned. So they began pulling their money from the stock market and taking it out as cash. With this uncertainty, fear and panic took root, which created a chain reaction, causing panic in the market. The fear-based decision-making that we're seeing is causing volatility in those markets, which means that there's now a higher risk for investors because of that volatility, which in turn increases interest rates. So when COVID-19 and the fear associated with it passes, most professionals, and myself included, believe that investors will dive headfirst back into the stock market and take advantage of the low-priced investments. This will most likely cause the interest rates to go back down. It's worth noting that the interest rate for purchasing is right around 4.75%. Keep in mind that those rates are based on varying factors like credit and income. This rate is the same that it was last year this time. So it's important to note that while it seems scary out there, an interest rate of even 5% is still a great rate. And on average, it would increase your house payment by roughly $200. A great question that I tell my buyers to ask themselves is, would you rather purchase a home and earn an average of 6% appreciation with an extra $200 per month in a mortgage payment? Or would you rather rent and have to deal with the volatility and insecurity of not knowing when and at what amount your rent will be raised? Lastly, because our economy has not experienced this recently, industry professionals have to look at trends that are taking place in the market. My office alone has 24 properties under contract and 61 coming soon properties. That's a lot of inventory that's going to hit the market soon. So just today I had a seller go under contract and I have 3 buyers that are under contract. I don't share these numbers to be braggadocious, but rather just to shed some light on the situation at hand. If you're comparing our current market to that of 2008, it's worth noting the differences at that time. In 2008, we had plenty of inventory and sellers had very little equity in their homes. If we compare that with our current market, we have very limited inventory, which is creating a high demand for housing. So in fact, right now, we have 1.7 months of inventory, which is very little compared to the amount of buyers out there. Additionally, many homeowners have thousands of dollars of equity in their homes. So please keep in mind that I'm not able to predict the future. Because of the circumstances, the best we can do is go off of current trends and past data and information that we have. So I personally do not feel like it is a time to panic or that it is a time to not purchase real estate. And I'm not just saying that because I'm in real estate, but just because I know the stats and the data. 1.7 months of inventory total in the Denver market is incredibly low, and we have way more buyers out there that need houses. The bottom line is people are always going to buy real estate because they need somewhere to live. And those circumstances in life that cause us to buy a home or sell a home, those are unavoidable across the board. So my personal opinion, which please take with a grain of salt, is just that I do feel that everything will start to blow over in a couple of weeks, and then we'll start to see those interest rates reduce again. So if you have any questions, please feel free to reach out to me. I have a lot of resources for you. I also have a lot of contacts in the industry that would be more than happy to answer any questions that you have and really try to help you guys navigate this time where most of us haven't really experienced before. And please understand too that I certainly can empathize with being concerned and maybe a little bit nervous about what our market is doing. I just wanted to shed some light and hopefully some hope for those of you who maybe were concerned and just were like, oh my gosh, I don't even know what's going on. So please reach out to me. Please feel free to call. You can text or email at any time. We want to make sure that you are taken care of, and we're just here to provide any valuable information that we can. Have a good day.